Holiday shoppers are making purchases online in increasing numbers, with Black Friday e-commerce sales hitting $7.4 billion this year, an all-time record for that day. And while Amazon is an e-commerce behemoth, other top retailers are upping their game to compete with Jeff Bezos, and it extends beyond just Black Friday. Target is a great example of a company that's investing in its e-commerce strategy and benefiting. Target saw online customer spending increase a whopping 47% during the first 2 weeks of November from last year, while Amazon's customer spending grew 32% during that same time frame. That's according to Edison Trends. Now, this is a weekly chart of Target here, and it's seen strong gains this year. It's almost doubled, and the last couple of months have been notably strong, providing investors several buying opportunities. Now, Target broke out of a long consolidation on its late August quarterly earnings report, which showed earnings growth of 24%. That marked a second quarter of acceleration. The retailer also gapped up on its latest quarterly report on November 11th, when we saw more acceleration in earnings to 25% for the quarter. Target also saw comparable sales for its digital channel grow 31% in Q3, on top of 49% growth last year. Same-day fulfillment services accounted for some 80% of Target's digital comparable sales growth. Now, both of these breakaway gaps on earnings are opportunities for investors to buy shares. Now, it might seem a little counterintuitive when you see a stock surging big like that, but IBD's research actually shows that these moves are often the precursor to even further gains. And the proof of that is right here. Now let's take a look at this current action a little closer on a daily chart. And what we'd like to see from here after this latest gap up that sent shares some 14% higher in one day would be for Target to hold these gains. And so far, the stock is holding gains and trading in a relatively tight range. And for investors who miss these breakaway gaps, wait for another proper entry to form. And swing traders could look for the stock to clear a short consolidation as a chance to get in. Now let's quickly contrast Target's chart with that of Amazon here. Now, the e-commerce giant hasn't really gone anywhere the last few months. Shares are currently consolidating and are hitting some resistance at the 40-week moving average. That's this gray line here. While Amazon has been a huge long-term winner, this just goes to show you that you shouldn't let that alone be the determining factor for buying or holding a stock, because you could be missing out on other stocks like Target that are rocketing higher on a big fundamental story.